Hello, and for those just joining us, I'm Kyle Sadler, host of Finance Speaks, a weekly vlog, podcast, and blog. Today I'm sending out my quarterly update to my clients, but you're more than welcome to join us. As I have spoken about over the course of the past few market updates, we want to check in on my outlook on the recovery from last year's negative returns across the market. So far, this year, the S&P 500 is up over 18% for the year-to-date figures. Please check out my Finance Speaks program on why your account returns may not look exactly the same as the S&P 500. However, the key market items that we want to look at today are as follows. The tariff increase on China's imports in May have triggered the end of this year's equity market recovery. However, while the stock market has since rebounded, the lasting impact can be seen in falling long-term government bond yields, the inverted U.S. yield curve, and the slowdown in global trade and weak global manufacturing surveys. As a result, it may be interesting to see if the Federal Reserve will cut interest rates in both July and September. You see, these indicators do not necessarily raise concern with us. However, as I stated at the end of last quarter, it tends to cause a lean towards a bias towards caution. So, not to bore you with the overhyped financial data that market news medias like to do, but let me give you what the gist of the three areas I want to highlight. Fiscal stimulus. The fading fiscal stimulus is likely to slow the U.S. economy relative to its breakneck pace away from last year. However, let me reiterate, we've had an 18% year-to-date rate of return for this year. We can stop growth for the rest of this year and we're still good. Sometimes even the best athletes need a breather. Manufacturing cycle. Here's what I am closely watching and where my caution is centered. Midway through 2019, the U.S. manufacturing cycle remains weak. In addition, the global manufacturing cycle has continued to decelerate and at mid-year are approaching recessionary levels. My promise to you is that we will continue to watch and monitor this area. Trade uncertainty. The trade war, well, it will continue for my lifetime and the lifetimes to come. It's just a talking piece for current events, and remember, when you are investing, well, at least anyone that I want to partner with, we're in it for the long haul. Give the news media something to chatter about and focus on what we're investing for. So, to wrap up, here are my concerns, but remember that they can all be overcome to avoid a market pullback and even a recession. I do raise some caution with regards to the inversion of the U.S. Treasury yield curve and the downtrend in the business confidence indicators, but I look at the China stimulus and the global central banking easing and the Chinese-U.S. trade war ceasefire, which could all set off a scheme to rebound in the global economy later this year. So, it's a fun and exciting time around the office, but I want you to remember that historically, it is summertime, and in the summertime, the markets like to take a break. There's more volatility because, frankly, investors tend to go on vacation. Therefore, those that are left to invest either suffer from sleep deprivation or investor speculation. Summertimes produce the ifs, but the true market growth period begins historically around September. So hang in there and let me know if you have any questions or need assistance with any financial matters. For Finance Speaks, I'm Kyle Sadler, headed out until next time. Be blessed and know that we're here for you. Thank you to Russell Investments, Barron Magazine, Bloomberg News, and MarketWatch.com for assisting us with the information and research materials needed to make this program possible.